Good morning. Welcome to YourOrlandoMortgage.com and my weekly economic commentary. For the week of May 11th, 2009, subject is bank nationalization. Is it happening or not? Economists and citizens alike have complained that it feels like the bailouts for our banks have been a form of nationalization. While that may be debatable, the recent news may take away any doubt. As a condition of receiving TARP money, banks gave the government non-voting shares in their companies. Recently, the Treasury announced that in lieu of paying back the TARP funds, banks may be forced to give the government common shares, shares which allow the government a voice in how those companies are run on a day-to-day basis, full voting shares. Why is this a concern for mortgages? The government should always let the free market forces dictate its course. The more government intervention, the more likely that there will be less and less to offer homebuyers and homeowners. In other news, the bank stress test results were released. In the Treasury Department's view, the 19 largest banks should have to raise an additional $75 billion in capital. Again, with all the debt being floated in the markets, the pressure on mortgage rates to increase is great. Jobs and housing reports were released last week and seem to show a slight slowdown in the bad news from those fronts. In testimony before Congress last week, Chairman Ben Bernanke said that recent data also suggest that the pace of contraction may be slowing and that demand was stabilizing. He said he expects the economy to bottom out and then turn up later this year. Thanks, and we'll see you next week.